discussing a live deal. What would you deal? Wholesale it, sell it, or hold it? My name is Jason Balen from Hard Money Bankers, co-host Ian Horowitz from Equity Warehouse with another podcast episode, live podcast episode that we're looking forward to. Ian and I were presented a deal this week, and we've been working through the way to structure it between us. And we figured, hey, it's not locked up yet. So we figured we will do a little case study. And I'd like to hear from, listeners, audience members, viewers, watchers. Just comment below this video. If you were in this position and you had this deal and you were controlling this deal, what angle would you go? Would you try to wholesale it? Would you try to sell it? Or would you try to hold it long term? Right, Ian?
Yeah, 100%. It's the hardest question as an operator to try to figure out, because we battle with this every single day. Every time a deal is presented to us, we're always going through a triage tree of what to do with it. We'll get into that in a minute. But guys, if you get any value out of this show, please feel free to share it when we're talking about deals or we bring in guests to talk about what they're doing. We don't care about the likes or subscribes, but we do care about the shares because it's the best way we can share this content. So if you guys get any value out of this as we deep dive into this real live deal that Jason and I are underwriting today and debating if we're going to invest in it or if the operator should just go and wholesale it and we're not even going to be a part of the deal. So I'm really excited to work through this, and you guys can kind of see our thought process as we break down what is a multi-million-dollar deal.
Ian, so let's start off with this. Why don't we just give a little bit of backstory of where the opportunity came from, and kind of what the numbers look like related to, where the deal came from, and the backstory on that was actually very, very interesting. And if you don't fully recall it, I can fill in the gaps because I've talked to my business partner about this and another potential investor that might come along for the ride. And
yeah, I'll let you fill in of how the operator found the deal. But I think the first step we need to take is I got the phone call from a friend of mine who we've been in multiple masterminds. We've been in multiple groups together. The reason the phone call came to me was because he said, "Hey, Ian, I can't really raise $2 million to do this deal." And I said, "Okay, well, what's the most you've ever raised?" He said, $1 million. I said, "Well, dude, if you've raised $1 million, you can raise $2 million. And he said, "I can't though." And I said, "Okay, well, what's the deal?" And he started to explain to me what it is. But I think the interesting part to note are two things right here before we really deep dive into this is, number one, and Jason pointed this out to me when we were discussing this, is he has already told himself that he cannot raise the capital. And he has looked up to me to say, "Hey, you have the ability to raise capital." And I remember saying these exact same words to Jason and Chris over there, saying, "Oh, I can't raise capital. I can't raise capital." When I switched my mindset to saying I can raise capital and I can do it, and I do one deal, I can do two deals, I can do 10 deals. That is really when the floodgates started to open. So I think that's really important. And number two, he looked at me as the subject matter expert in the field. And I'm not, as you guys know, we're very humble and not egotistical. But in the same sense, it feels really good that someone reached out to me. Actually, Jason, if you remember, two people have reached out to us about two different deals at the same exact time because they were both struggling to raise capital. Just this one wound up being the winning deal that we decided to actually look into investing in.
Yeah, I think the other deal was a pretty big heavy lift. And although, I think there's a lot of pros on that other deal, it was just a much bigger raise, a bigger heavy lift development deal, that had reached out. So yeah, let's go through this one, a little bit. And I think Ian summed that up pretty nicely is, there was a limited belief of, and I've seen this through cycles. I've seen this over and over and over. There's the limited belief of that you can't raise the capital. And after you tell yourself that, you're never going to put yourself against the wall, you're back against the wall hard enough to be forced to do it. There's that side of it. And then there's also the side that what ends up happening is the capital investors that potentially come in, the newer capital investors that come in, they're going to demand something that you might think is unreasonable when it really isn't. It comes off like that because I'm guessing, and Ian knows this person better than I know them, but I'm guessing it's going to be like, yeah, I'm used to just reaching out to a few friends and they're just like private investors, and they give me some money at 8-10% return, unsecured, or maybe a few security documents, and it's very, very easy, and it's a handshake deal. Well, that's not scalable, a handshake deal. If you're looking to raise more money and do bigger projects in the future, there's going to be more things in line where it's you're going to go from like raising money from your best friend or a family member to people they know, then people they know, then people they know. And what ends up happening is it's got to be secured properly. It's got to be done the right way. And, maybe the returns, because they're bigger risks, have to be higher. And I see that roadblock all the time. It's like, oh man. And I see that when I sell hard money loans every day. Someone who's never used to using a hard money loan, I tell them it's a 12.9% interest rate, 13% interest rate. They're like, what do you mean? Bank money is 6.5%. I get my guy down the street that I'm friends with give me 8% or 9% or 10%. I'm never paying 13%. And I'm like, hey, listen, look, do the math on these numbers, right? And see if they work in your pro forma before you just completely turn your back on a deal and just don't do a deal because you think that number is too expensive, right? Like that is a mental hurdle, mental mind block. Ian and I are involved in potentially doing a deal with a very, 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 very big, well-known operator at the moment that we're potentially working with, that we're going to invest some capital as a limited partner on their deals. And the pro forma projected return is 25% plus, right? Because that is what it takes to get capital investors at scale to be interested in this particular project that the guy's working on, right? It's a big project. They're raising tons and tons and tons of money, right? There has to be very big upsides for capital investors, security plus return upsides, to be vested in that particular deal. And the numbers either work or they don't work, type of thing. So point being, as I got on a tangent a little bit, but I know that that's a roadblock that typically happens, especially with smaller operators and investors and syndicators, because they hear a figure that's higher than they're used to, and then all of a sudden it doesn't make sense. And the way that we're potentially trying to structure something is with some sort of debt equity blend, where actually the operator would be giving up significantly less equity because there's a debt component on it. So instead of overthinking or writing off something that sounds irrational, you got to look at it both sides, be like, oh, wow, this is actually a better deal for me. I just have to get over the hurdle that I actually am paying this high of a return for somebody. So anyways, quick backstory was this particular partner in the deal, the GP in the deal, the sponsor in the deal, whatever, reached out to Ian, and it's kind of funky. He was involved in a deal on this particular property as a limited partner that he deployed money. Well, it was a development property. What do you call that? Like a light industrial flex space? Is it?
Yeah, light industrial flex space that someone else developed.
Okay, so that someone else developed, and I don't exactly know how long it took. Let's just say 2 years, right? And he put up his own capital to be involved in it. Well, the borrower, the sponsor, the GP went sideways and filed bankruptcy because he had a lot of other issues on it. There was an argument, there was a Ponzi scheme involved, and it brought down this particular project plus multiple other projects that he was involved in. And the bank, in essence, foreclosed on this particular building. Now, here's the interesting thing that you don't see every day. The project was 100% completed, and lease up was already started. So this wasn't like, hey, we take over this development project that this guy failed on. The project's done, right? There's 52 units. A handful of them at the time of foreclosure were already leased up and rented. Maybe the terms aren't perfect, but they were. It's through the bank's asset management department. So this particular, GP that was involved knows the area, lives in the area, reached out to the bank, had a relationship with them, and said, hey, listen, can I help asset manage some of these things for you? I was involved in the project. I know the project to begin with. I know some of the tenants. I know things. Can I help kind of offload this? which is unique. You don't see that every day. And then this is where it kind of gets interesting. The bank agrees. They agree to provide first mortgage, call it seller financing, but it's really first lien position, a mortgage on it. He would have to raise the rest of the equity. And then going back to the real question is, what would you do? What would he do? Or should he do? Should he wholesale this thing? Should he finish operating it in order to get it leased up more so he could sell it at a premium? Or should he just hold this for long term? And that's the real question. And if you want, Ian, maybe we can dive into what happened, because originally his game plan was just to wholesale it.
Yeah, so let's just talk about this. Let's frame it up. And again, let's just go over the things that worked correct, right? We've already gone over how we connected the deal, but let's go over how the operator connected the deal and what the takeaways are. The takeaway is our guy was out there doing deals. He approached this bank on another deal and said, oh, wait a second. And they said, no, we're not going to finance that because we just took this property back. And he said, well, wait a second. Does it happen to be such and such property? And they said, yeah. And he said, well, I'm invested in that guy's deals. Like, how can I potentially buy it? Because I'm interested in protecting my losses. And I think that's a really interesting conversation that takes place to put the asset and everything back in a better position and protect his capital. So what is the takeaway? The guy's doing deals and he's wearing his heart on his sleeve. What is interesting is he's willing to do that, but in the same sense, not willing to wear his heart on his sleeve when he's raising capital. So you can see where people excel and then where people need help getting over that hump. So it's very interesting because this is a very active person who's doing deals. Now, let's talk about just some metrics of this deal. He was going, I believe he has the deal under contract from the bank right around $6.5 million. The bank's willing to do about $4.5 million of financing in first position. And the terminal value conservatively, if everything goes correctly, is about $10 million. Needs about $500,000 of, we'll just call it working capital. So the total sources and uses is you need $7 million, which is $4.5 million coming from a bank, 2.5 coming from equity, and on the other side, you're buying it for about 6.5, and you're putting about $500,000 in. So, operator says, "Great. Well, instead of doing all this work, I'm just going to wholesale it." When he initially finds out about this deal, and he puts it on the market, and immediately gets some good offers, and decides to go with the group. They put up the deposit, and the day before the closing, they back out, and he literally lost an $800,000 wholesale fee, which is gigantic, dude. That is a big, nice, fat wholesale fee. I mean, if we could all make an $800,000 wholesale fee in one day, I think we would all be pretty, once a year, I think we'd all be pretty excited about that. Now, with that being said, he then gets stuck with the property and says, hey, bank, I can't close. I know I told you I was going to do X, Y, and Z. This happened. I still want to do the deal. I need an extension. And they granted it to him. And now he's at this crossroad where he reached out to us and says, should I do the deal or should I continue to try to wholesale because I have other groups involved? Now, the wholesale fee is going to land closer to $500,000-$700,000, somewhere in there. And he also has the opportunity to operate the deal and potentially, if everything goes right, outperform that $500,000, but not by much. I mean, we can go through the numbers here. The outperformance by operating the deal will probably put him closer to about $1 million, but it's 3 years of very, very hard work to get it there. So then the question becomes, what should the operator do?
Yeah, I'm trying to calculate some numbers here while you're talking related to and I'll tell you my opinion related to continue to wholesale or sell. But I never really ran the numbers on if you held it for a long period of time, what that will equal. So let's talk about wholesale and sell. And then when you jump back on, I have all these numbers in front of me. I just need to calculate them real quick. And then we can talk about the hold period. So my philosophy with a lot of things is money today is better than money tomorrow. And if I can make half as what I could today as I could tomorrow, I would take it today. So, for instance, if he was going to get $800,000 as a wholesale fee, and I know that deal's off the table and it might not be back, to me, that's like, cool. Do I take $800,000 now, or do I execute on this project and try to make 1.6 million? And I know that's a big difference because it's a big number, but I would take the 800 guaranteed, no risk, keep it freaking moving. And I would do that on the wholesale side too at this point. If it was, I think the current setup potentially is 500, thousand wholesale fee. I would take $500,000 wholesale fee today, then have to take risk and execute to make $1 million, tomorrow. When I say tomorrow, a year from now, 2 years from now, 3 years from now. And it's a big number. Don't get me wrong. But the wholesale fee is guaranteed. There is an argument that you're making long-term capital gains if you're executing on this for a short period of time before you actually sell it, right? So that tax, so it's not, it's not equal taxes, right? On a wholesale fee, you're going to get banged up on taxes. It's going to push you to a pretty high tax bracket immediately. But I would probably say personally that I would take the chips off the table now and keep it moving. Now, if it was like 3x plus, sure, I would go along for the ride. But I think if it's like, 2x, it makes sense to just keep it moving and move on to the next project. And Ian, as you jump in, I'm going to talk about the hold numbers, and then we can kind of analyze those to see if that makes sense.
Yeah, on the wholesale side of things, I think probably if you would have asked me 3 years ago or 4 years ago, I would probably say, now you're out of your mind. I'll take the risk and I'll move it forward. But an interesting thing has happened over the past few years, and there's something about having cash on hand and executing on that and taking the cash off the table that makes a lot of sense and getting very, very cash strong. All of us, and this has taken me a very long time to learn, but all of us have investment vehicles. If you're thrown $800,000, right, and you have other operating properties, yes, there's active income, but if you're a full-time real estate professional, you'll be able to offset some of this. In the end, you're going to have whatever, just call it $600,000 to go and deploy. And anybody who is an operator should be able to find returns north of 20% by actively running deals. So taking that 600 grand, going to find another deal that maybe is more manageable where you don't have to raise capital. Maybe you're finding a deal that you can deploy capital into, like the large operator we were talking about that's got a 23%, 25% IRR. Okay, well, yeah, maybe I take 600 grand and allocate some of that to that. Maybe I put it into some other marketing channels. Now, the interesting thing is that this deal's in his backyard, so I know it gets harder to say, well, it's right there. It's so easy. I can see it, feel it, touch it. But, man, there's something about getting that close to seven-figure payday up front that makes a lot of financial sense. And to me, it'd be very hard to not execute on it personally. That's just my gut feeling.
Yeah, so I agree. So let's talk about the hold option as well. And obviously different operators have different thought processes on holding real estate. I mean, I don't personally I like to get in and out of things. That's just my setup. I'm not saying that's the right way to do it. If I'm the operator, I like to get in and out of it. If I'm, a limited partner, or I'm involved in, a long-term deal that could potentially turn into something much bigger, I don't mind being involved longer. But the NOI is about 700, call it, on this particular project, right? After the mortgage, the mortgage payment is about $376,000. It is a year, obviously. So that means $325,000 a year net income, but that doesn't take into consideration taking care of your capital investors where you raise that $2 million from. So depending on how you structured it with them, let's say they're still getting some sort of 8 pref, give or take 8, 9, 10 pref. That's another $160,000 to $200,000 that you're due to pay your capital investors back on, which leaves you about whatever $125,000 or so potentially in distributions, depending on how you have that set up. Do you have that set up to your capital investors? Do you have that set up going to you? or your capital investor is just making, a preferred return, depending and waiting for a liquidity event to get the big picture. So again, that's real money, and there's a real return that you would have to be calculated to determine if it makes sense to do that. I just look at it as hard numbers of, hey, if I can walk away with $150,000 a year on this property, or I can make $600,000, which is 4 years or so worth of gains doing nothing, I'd probably just do that wholesale. But again, the unknowns that are always there is, does the property appreciate? Are we in an environment that cap rates potentially could go down? Can I outperform my pro forma data? All of those things are things that can turn these things in this cash flow significantly higher. So then it kind of comes down to personal preference. What I do like about this is I think all these numbers we've talked about for the most part are pretty close to being, as the general partner, where they're going to end up coming in at. I actually think they're all pretty equal, and there's no wrong decision. It's just a matter of what you want to do on it. I do believe that. And I think that, if the market ends up being strong and you outperform your pro forma, it turns into an extremely good deal. And if the market changes, the tenants aren't as strong as you thought they were, it becomes a big headache. There's a lot of turnover. Whatever interest rate environment increases. I don't think you're bankrupt. I think obviously the project doesn't perform as well as you would hope that it would, but I still think it's a good deal that way as well. So I really do believe that it's preference. I know a lot of big real estate investors, they are buy, hold forever mentality. Some of them just want to get in and out. And I think any decision that you make on a deal like this, probably could work. I think all these could work. And I'm curious, for everybody who's listening and watching this video, comment what you would do in this. I'm curious to know what you would do if this was your particular deal.
Yeah, I think when I'm sitting here thinking about it, I think there's a few other points that are missing. Is he needs someone to co-sign the debt, right? So he's going to give up additional equity to that. He's got 30 days to raise capital. He's probably giving up some additional equity to that. Yeah, he's talking to Jason and myself, so we can get a little creative to protect some equity for him. But in the grand scheme of things, if the total net is going to be $3 million, and let's just say he ends up owning 50% to the GP side in some way, shape, or form, then he's got to split that with somebody else, even as a minority partner. You're holding on to 30% for $3 million. You're only netting another $1 million. You're netting $900,000. Is it really worth the risk at that point to step up and say, okay, well, I'm willing to do this and not wholesale it? And the fact that he's got so many people that want to buy it because they want, they're looking to get into this asset class. I told him, I said, dude, just get $500,000 and fucking hold 5 or 10% with somebody and just be done. Right. Like, again, I know it's in your backyard. Now, look, if you're trying to build an asset management team, you're trying to build a property management team, you're trying to maximize your operating overhead, there's a case to be had to say, take the lesser amount of money or take the operational risk, run the deal, fulfill your property management team so you can scale and grow that, so then you can then continue to grow your operation. So really it comes down to the operator. And this is where us looking into investing into this deal have to say, what is this operator's ability to perform on this deal? And we will find out. I think after working through this, speaking on all this, mentally working through all this with Jason right here live on this podcast, I think our recommendation when we get back on the phone is, hey, man, listen, you need to do what you need to do. And I'd probably execute on the wholesale deal. If you want to do the deal together, we will find a way to structure it. I just don't know monetarily you're going to get a bigger payday in the long run. You will if everything goes right. However, if something goes sideways, like we just had for the last 3 or 4 years, we all know what could happen. And it might not be worth your financial risk. And then he can make an educated decision. Now, the time of this recording, I'm literally watching Powell say he's going to cut rates by another 0.25%, which is positive to the market. you're going to see a nice little uptick here very shortly. So with all that being said, I would still always vow, and maybe selfishly, because I'm interested in seeing this deal through, is that we do the deal. But in the same sense, I totally understand if he wants to go out and wholesale it. And I don't want you guys to think we're wishy-washy, but in the end, the decision's different for everybody. At this point, right where I'm sitting, I would probably just take the 500 grand and say, hey, hell of a nice wholesale deal. Keep it moving, stack some cash, and go find another deal to do. Something that's more attainable, where I don't need a co-signer to the debt. I don't need to raise a bunch of capital, where I can raise capital that I'm already comfortable with. And I don't need to feel like I'm selling my soul to go do that deal, where it's like, oh, well, I've never raised this much, so I'm going to try to structure something I don't know how to structure,
So it's also not that easy to wholesale in a $6.5 million deal. So
that's the other flip side of this.
Like the buyer that, he thought he was going to have an $800,000 wholesale fee, the new buyer is going to be the exact same type of person, just buying it for $300,000 less. Right. Like there's no guarantees that that's going to work. It's a lot of money to put together in a short period of time. So the point is, and if the execution can be done, he will make a lot more money. He will, before we're talking about 800 to 1.5 million in profit, in this case, it could be 500,000 compared to 1.5 million in profit, which is 3x what he could make, or it might be $1 million in profit and be 2x. Either way, you're not going to not wholesale that deal for 500,000 just so you can make $500,000 doing a deal yourself. That's dumb. That's not going to work. But at the same time, the wholesaling option might not end up working anyways. And then you see what's up. But I think the important part of all of this is, well, a few different things. It's always good to have options. You got to pick what option's best for you. And I think a learning lesson that we started with related to the raising capital side is, soon as you get out of your normal setup of, oh, hey, I got this guy giving me money at this, you got this, and you're dealing with a more broader audience, you have to put more things in place. You gotta, you gotta think about your capital investors in mind a lot. Typically what we like to do with our capital investors, it's not structured like this, but it's usually like a 50-50 setup. And I'm not saying we structure it as a 50-50 setup, but if you look at the path of every deal that we've ever done, it probably backs out pretty close to we made half the money and the person taking the risk and putting up the capital made half the money. And I think that's a win-win. I think if, you wake up years down the line and be like, hey, listen, I did a lot of good deals and my capital investors, trusted me with money, hard-earned money that they earned, and I made half. They doing a lot of the sweat equity, they made half. I think that's a good place to be, and their money was priority to my money, so they got paid back before I got paid back. I think that's a good thing, and the goal of all of this, at least in my opinion, is to be the bank, be the investor, think like the investor. Because guess what? If you don't need a capital investor and you do this yourself, well, guess what? You make twice as much money. So instead of him doing the deal and making 1.2 million, and then capital investors making 1.2 million, I'm not saying it's going to come out to be like that. You do the deal, you self-fund it, you make twice as much money. And I know at the beginning that can't happen. I also know that a lot of people are like, well, that's dumb because, you need that for leverage to go do more opportunities. I guess that, but people are in different situations.
Yeah. And I think the final point to leave everybody with is, and I know it's a little different for Jason when he's doing hard money loans because you get commitment fees. But one conversation we did have was, well, hey, why don't we just take both roads? And then if I wholesale it, I'll just reimburse you. It's like, well, no, once we've committed to doing this deal, it is game on. We are raising capital for it. We're putting our time, energy, and effort into it. People are starting to move investments. People are starting to move money. We're putting our reputation on the line to go and do this. There is not a point of no return. Now, yes, you're always in charge of the deal, but next time you call, I'm probably not answering the phone, right? So, again, look, dude, go make the money. We are all for it, right? Go make the money. But in the same sense, if we're going to head down the road of going to do this deal and we're going to put that time, energy, and effort in, it's got to be something that we all love. We don't ever want you to have self-doubt, and go do the deal. So I'm interested actually long-term, not only just for this deal, but for future deals of finding operators like this. I know I've talked to Jason a lot about this. This is actually what I really enjoy doing, is looking at other investors and seeing how we can place capital into their capital stack and really exercising our expertise of operations, of the bookkeeping, of raising the capital, of doing these different things. So I'm actually glad the phone has rang on a few of these. I just wish there was a little more timeline or time horizon to structure a little bit better to make sure everybody's doubts and wants and needs are all met. But in the same sense, the good news is the phone's ringing. And I think as the door opens, as the market opens as a whole, the phone's going to ring a lot more for people to bring in cool deals like this. And for the right operators, it's something that we're very interested in doing. So,
yeah, all good points. So again, I am curious to know what our audience thinks about this deal overall. They might be like, dude, that deal sucks. At wholesaled and bounce. And that's it. But it's a big deal, right? It's a $6.5 million deal, right? And the bank's putting up, 4.5 or so. So it's, yeah. And I know we didn't go into too many details related to where in the country it is and the asset type that it is. And that obviously matters. It's where I think it's a decent, emerging market. I think it's a decent market. And, I'm personally on an investor side. I'm comfortable, with the operator, and there's, I like the asset class. I've been doing some due diligence on it and talking to people locally in that area that I know of what they think the types of tenants are. So I don't know. Anything else to add on that, Ian, or should we wrap this episode up?
I think we should wrap it up and leave everybody with the following. You got to do what's right for you, whatever you feel like in your gut, your intuition, whatever it is. If you feel as though you should wholesale a deal, wholesale it. If you think you should do the deal, do the deal. But when you're looking at deals, you should never toss any idea out. That's why I always like looking at so many deals, because there's multiple things you can do. You don't know what somebody else is looking for. You don't know where somebody else is trying to execute. And you control what you can do, right? I always said there's a trauma, there's a triage chart to when you're doing deals. Deal comes in, do I want to do it? Yes or no? No. What else can I do with the deal? Can I wholesale it? Can I partner with it? Do I flush it down the toilet? Do I renegotiate? If I want to do the deal, the simple answer is yes. Great. How do I want to fund it? How do I want to structure it? What kind of terms can I get? And so on and so forth. So this is a really good exercise that everybody should be going through on every deal they look at. And yeah, that's, guys, if you got any value out of this, please feel free to share the show, and we will follow up and update everybody no matter what happens. Maybe we'll have an operator hop on the phone and come on the podcast and talk to us about what he decided to do. So only time will tell.
Thanks for tuning in to the Real Estate Reserve podcast. Do us a favor and like, comment, and share our broadcast. It helps the algorithm and helps us spread the word too. Till next time, thank you for tuning in.